I'm your host, Stephen Norris, and as always, my co-host, Michael Dye, Megastar Financial. Well, welcome here, everybody, and today's topic of conversation is going to be all about FHA loans. Now, on this topic, obviously, the master in the room, Michael, is me talking about the FHA loans and how do you qualify for that, what are the qualifications, certain down payment restrictions, etc. All right, so before we get into this, we want to let you guys know that some of the stipulations that come with the FHA or just the negative comments about that. Oh my gosh, FHA loans are so much harder to do as a lender's point of view or as a selling realtor. They're so much more complicated to take on for my sellers. I don't want to deal with that. Complete nonsense. All right. It absolutely is. There's been a lot of legislation passed over the last couple of years, as a matter of fact, that makes them a whole lot easier to go through the process. And they always say, well, the appraisal is the hardest part. Not anymore. They've also made that a lot easier for folks too. So if you are currently trying to buy a house and the other realtors are telling you FHA loans suck, they're too difficult, that kind of stuff, they do not know what they're talking about. They are not educated properly, or they haven't educated themselves updated wise over the last couple of years. All right. So we're here to tell you that those things are just the negative perceptions that are not true. And if you guys do want the truth on that, reach out to myself and or Michael, because he is the professional. All right. That's why he's here talking to us today. But that being said, Michael, take it away on some of those bullet points.
All right. Hey, Stephen, thanks. That's a really great point. And the fact is that when some realtors say that they don't really want to accept FHA loans is because they really don't understand them. And in this market, right, we're still talking about qualified borrowers one way or the other. So it's about getting the loan closed more so than anything. So make sure you talk to your lenders and in your area, so that way you're getting an expertise on that to make sure that they are understanding that loan program. Well, let's talk about some key points on there. And as we know, when it comes to loans, one of the key things that we're always talking about on everything anymore is really FHA loans. Is your credit score. So on your credit score, we need to make sure that at Megastar, at least, we want a 640 and above. However, we do have some down payment assistance programs and some other programs that we have available for borrowers that have a 620. So we can use their programs and get you under contract as well with that. And you don't even have to use a down payment if you don't so choose. So that's a really good thing to know. And that's one thing that you want to talk to your lender about is they may have a different credit score to get you under that contract. They might have some overlays at their company where they require a higher credit score than a 620 to get that loan for you. Another big thing with FHA is that we kind of consider a lot of times our first-time home buyer program, but really it's for everybody. And there's options on here as far as what you want to put down as a down payment. You can put down 3.5%, or you can put down 5%. We'll talk about both options and what the difference is as we kind of continue here. With the 3.5%, that's just the minimum down payment. So you're allowed to do that. And that's a really good thing. The one thing that FHA does do, and how it keeps its wheels on the bus, if you will, to allow borrowers to use 3.5%, is they charge an upfront mortgage insurance premium. And that is 1.75% of the loan amount. And that goes on the back end of your loan and is financed. And that's how FHA and whoever your lender is kind of makes their money to go ahead and are able to give you that program at 3.5% down, because you're not very vested in that property at that time. If you're putting 3.5% down, then you're going to have that 1.75 upfront mortgage insurance premium, as well as your monthly mortgage insurance is going to be 0.85% of that loan amount. So it kind of gives you a good idea of what your payment is. You can kind of run that through and figure that out pretty easily. The difference is if you put 5% down, then your mortgage insurance actually goes down to 0.8%. So that'll actually save you a little bit on your monthly payment and has you a little bit more vested in the property. And that's why they lower that down. But let's talk on that one point that Stephen was mentioning is the appraisals. The appraisals are a little bit more, they do more of an inspection on the home on the FHA appraisals than they do on conventional. And the biggest difference is that FHA requires that there can't be any health and safety issues. So any cracked windows, which no one wants cracked window or broken windows when they move anyway, as well as if there's like a hand railing, that there's some stairs and there's no hand railing going down. You can't have that. One of the biggest things that we see a lot of is a fact of peeling paint, right? They want to make sure, FHA wants to make sure that that house is livable and habitable the day the borrowers move in and close on that loan. And that's the reason why they have that. But most of the time in this market that we're seeing homes that are dilapidated. So not sure why some realtors have such a negative thought process on FHA loans. As Stephen said, I just don't think that they're very educated on it. But that's a quick rundown of what FHA loans are. Love to chat with you more about them if you like. Stephen will give you all our contact information. And Stephen, do you have anything else to add on that?
I mean, that's a lot of good information that we kind of just shotgunned at you guys all at once, kind of drinking through the fire hose right there. And, Michael had some good terms in there, like dilapidated homes or the back end rate or the 1.75 up front or the back end of your interest rate. And those guys, those are terms that we as professionals use in the industry, but it's very, very easy to understand about what it is that we're talking about here. So let's break it down very simple, all right? FHA loan, minimum credit score that you're going to need on some companies is 620, 640. Some out there even go below that, all right? So make sure you ask the question to your professional. Number one. Number two, down payment minimum, 3.5%. Conventional loan, 3%, all right? So it's not a big difference right there. Or you have the option of doing 5%, which gives you a little bit of a better bonus, as Michael talked about, all right? Now, number three, the PMI, private mortgage insurance. Everybody here knows what that kind of means. And if you're not, obviously, we can talk to you more about that. But basically, it's just saying that the lender or institution giving you that loan on your house, it's a more risky loan because you're not at their current loan to value ratio, which just simply means that your house is not appreciated enough or you didn't put enough money down. Not a problem, all right? Most institutions say at 20 or 22%, depending upon who you work with. So please ask that question. It will either fall right off or you refinance it off. And in the case of FHA loans, you must refinance it off. Otherwise, it will always stay on there, all right? Something that they're not going to tell you. And in the market, specifically in Colorado, we experienced 15 to 22% growth over the last year, and I expect more than that this year, right? So if you sit in your house with an FHA loan that you bought last year and you haven't refinanced your house in a year, it might be time to give us a call. Very simple, all right? Now, last point, number four, the appraisals. Michael mentioned that it has to be inhabitable. That's the only qualifier, all right? Health and safety stuff, there's an entire Google list of things that are health and safety, but that is all going to be based off of who your appraiser is. And if they're giving you a hard time, you better sure you have a good realtor backing you up, all right? Period, because there is never a problem that you cannot solve if you just think through it, all right? And of course, guys, we're here to be a resource for you too, so please reach out anytime you want, and we'll see you guys all next time.
Have a good one.